Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hi, my name is Ravi. Welcome to our weekly podcast. Indian risk assets withstood a volatile week. Global equities came under pressure as investor optimism about the direction of the economy and policy action faced its first test in 2023. Market sentiments was weak as investors still grappled with the previous week's 25 basis points rate hike by the US Fed and a surprisingly strong jobs report. Over the week, the S&P 500 index fell 1.1%, MSCI World and MSCI Emerging Market indices fell 1.3% and 2.4% respectively. The Nasdaq index snapped a 5-week winning streak with its 2.4% weekly decline. Back home, Indian equities recovered after a weak start but traded range-bound, mixed earnings report, foreign investor outflows, and RBI's policy rate hike. The Nifty index closed flat for the week. Broader markets outperformed Nifty, with the Nifty mid-cap index up 2.1%, while the small-cap index was up 1.2% for the week. Among sectors, capital good, telecom, and realty were the best-performing sectors, with gains of over 1.6%, while utilities and metals were the worst performers with cuts of over 4% during the week. The Indian fixed income market came under pressure after the RBI's monetary policy announcement. Bond yields rose across the curve as market participants were disappointed with the RBI's decision to retain its withdrawal of accommodation monetary stance. For the week, the 10-year Indian government bond yield rose by 9 basis points to 7.36%, while the 3-year and 5-year Indian government bond yields rose by 17 basis points and 18 basis points respectively. The INR depreciated over the past week amid higher US bond yields, strengthening US dollar, rising crude oil prices, and foreign investor outflows. For the week, the INR fell 0.8% to close at 82.5 per dollar. Among other key events during the week was the RBI's monetary policy announcement. The Monetary Policy Committee of the RBI again moderated its pace of rate hike and voted in favor of raising the policy repo rate by 25 basis points to 6.5% with a majority of 4:2. Accordingly, the standing deposit facility and the marginal standing facility rates were also revised up by the same quantum to 6.25% and 6.75% respectively. The cash reserve ratio or the CRR remained unchanged at 4.5%. The Monetary Policy Committee also kept its stance unchanged with a majority of 4:2 and maintained that its focus of withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. On growth, the RBI revised its fiscal year 23 projection to 7% from 6.8% earlier and projected its fiscal year 24 growth forecast at 6.4%. On inflation, the RBI revised its average inflation projection for fiscal year 23 at 6.5% from 6.7% earlier and projected its average inflation forecast for fiscal year 24 at 5.3%. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.